Brian Grimes, your real estate mentor, back with another action-packed session. Today, we're going to talk about the best real estate markets to invest in 2025 and beyond. If you've been thinking about where should I invest, what are the best markets, make sure you guys stay tapped in until we get to the end of this thing, because I'm going to break it all down for you. So what are the best markets? I look for macro trends. I want to see how many people are moving in to this city year over year. Do we have more people moving in or moving out of this place? So you'll see, like California, there's probably more people moving out of California right now. So that would be a net negative to me for a macro trend. I don't want to be buying in a place where people are fleeing. I want to see net in migration. People are moving here. They're moving here for a reason, because there are better landlord tenant laws. There are good taxes here. The taxes are lower here than other areas. There are jobs here. That's a big macro trend. Is Amazon coming? Are they opening factories? Do they have lots of colleges? Do they have lots of universities where lots of students are coming and then they graduate and they want to live close by and keep hanging out with their friends? And then they start working locally and creating a workforce environment. You need to focus on your macro trends when you're making your decision on what markets you want to invest in. Sister cities. I believe in sister cities. I'm giving you guys some of my philosophy. So I look at New York. New York is very expensive. It's the city of the world. People get priced out of New York. Where do they go? They go to Philly. Why? Because they don't like Boston. Why? Because, the Sox, the Yankees, they don't like it. They don't like, freaking Tom Brady. And, there's like a lot of tension. So they tend to move to Philly. Philly is a more affordable city. Philly is close. It's an hour and a half away. It's the sixth largest city in America. It has all these things going for it. So I'm looking at sister cities. The same thing with Baltimore. People are in DC. DC is very expensive. They get priced out of DC. Where do they go? Baltimore, or close thereby. And then still on those train lines where they can get into DC to the high paying jobs quickly. So I'm looking at these types of metrics. I want to invest in sister cities because the macro trends show people are moving out of the more expensive cities into the sister cities. So I'm looking for that. I want to focus on landlord tenant laws. Following these landlord tenant laws, these squatter laws, how are they being enforced? How are they being changed over the course of time? This is very important. This is becoming extremely important. Developer spreads. Not enough people talk about developer spreads. Developer spreads is one of the most important concepts to understand as a real estate investor. What a developer spread means is, can I buy properties for $50K and then put money into them and then they're worth like $225 to $250? If I can do that, there's a spread there. There's a developer spread there between what I can buy for and what the after repair value is. You can only make money as a real estate investor in markets that have good developer spreads. Other metrics, like I said, the important metrics of, especially for cash flow, we'll talk about cash flow, are I want low entry prices when I'm cash flowing. I want high ARVs. So I want that big spread. And I want low property taxes. You can Google, or you can chat GPT, which is super Google, which cities have the lowest property taxes, or the lowest average property taxes, or the lowest dollar amount property tax. And then high rents. High rents. Baltimore is a really cool city because you can buy really cheap properties. Damn, the rent's almost as high as it is in Philly. But the cost of the property is really cheap. It's cheaper. But there are other metrics, like, is it developer friendly? I'm looking at that. How quickly can I get my permits? How annoying is the city to deal with? What's the call? Are they constantly fining people for, like, oh, the grass is 6 inches, we're going to fine you $50? What metrics am I dealing with in actually building properties and scaling a portfolio? Like, it has to be fertile ground, essentially. If you're going to go and scale your portfolio, you don't want to scale a portfolio into a headache city where it's a nightmare to be a developer, because the people who are in power are like anti-developer, even though their city's going to hell in a handbasket. You also want to build in cities where other developers know it's developer friendly, because more developers will be there, and developers are your friend. This is abundance mindset, guys, not scarcity. I don't want to be in a city where there are no other investors. That's foolish. I want to be a shark in a city where there are lots of investors. I just want to be powerful and stronger than the average bear, because I want people building around me. There's nothing better. I promise you, no better feeling than when you build a nice rental property and then you show up one day and somebody's pouring $250,000 into the property next door. And you're like, damn, I didn't even have to put a dime into that thing. And they're driving up my property values. They're driving up my portfolio values. No better feeling in the world. No better feeling in the world. It deserves a God bless America. It gets a God bless America from me every time. They just poured $250,000 in. Oh, no, there's another guy across the street. Fantastic. The market's going up. The rents are going up, and you're going to make more cash flow. Your ARV is going to go up. That's a refinance opportunity for you to cash out refi into lower rates as rates fall. So you have to look at these other metrics.